Hello, London, and to all those joining from around the globe. My name is Rauch Mannino, broadcasting from the United States to provide a little perspective into U.S. investment in Africa and also provide a scene setter and primer for the conversations ahead. About myself, I recently served with the U.S. Department of Commerce as Deputy Assistant Secretary for Global Operations and Senior Advisor for Global Markets for the International Trade Administration. I also co-chaired Prosper Africa, the U.S. government's two-way trade and investment initiative, and was an advisor for the U.S. Agency for International Development. Now I lead Portsmouth Limited Company, a strategic advisory and consulting firm, providing commercial diplomacy assistance in markets around the globe, of course, in Africa as well. So, very quickly, a broad overview of the U.S. attitudes towards investment in Africa. I want to note that the U.S. investment community is still working to return to high marks set in the previous decade. In 2018 and 19, the U.S. private equity and venture capital community was about $4 billion, just a little under, in investment on the continent. However, the pandemic sort of took that back a couple of steps. With that said, the recovery is underway, and as expectations and timetables are coming back together, there is certainly some excitement about returning investment to the continent. I do want to make a quick distinction, too, between the different sizes of investment communities. In Europe, you have a wonderful community of impact investors and others looking at the continent. The U.S., that community is a bit smaller, but is still equally excited to be on the continent. And I would note, too, this excitement really stems from one real key takeaway, and that is the emerging middle class across the continent. So we see so many forecasts about the fastest growing economies on the continent, and we recognize that within 10 years, 1/5 of the world's population will be based in Africa. There's some real big excitement to move from the traditional sectors of investment, the oil and gas, the construction, the major infrastructure, to meeting the moment of the middle class. So housing, logistics, communications, food, healthcare, of course. So there's been a great amount of growth, and it really has a number of investors excited here. It also finds U.S. small business serving communities across the continent, and a diaspora leverage their experience on the continent. It's really opened up some great avenues for U.S.-based projects. It also generates some interest for those investors looking to meet broader environmental and social goals. So a few examples of what this is looking like from the U.S. perspective. First example, Sebastian Institute of Technology. It's a U.S. small business that recently secured an investment from Cisco Capital for a Burkina Faso cybersecurity project. Another example, the U.S.-owned Sun Culture just received $14 million to invest for a solar panel and irrigation pumps projects in Kenya to help meet small farm needs across Kenya. So let me also add, there are great examples of U.S. firms meeting these projects with smart investments. And I'll point to one specifically, and that's Black Ivy, a company that builds and operates and scales businesses to drive long-term growth and value in essential sectors like healthcare and housing and the like. But firms like Black Ivy and small businesses like Sebastian Institute of Technology are only part of the conversation. Because right now, I want the audience to take note of the U.S. government's own shift in its attitude towards Africa. In just a few short years, there has been a visible increase in attention toward the continent, transitioning from what has been seen here domestically as an aid-based relationship to something built on trade and investment. The USG, the U.S. government, is really getting behind its American private sector value proposition, and as an example of this, Prosper Africa has now become really the best, most straightforward evidence of this excitement. Knowing Prosper Africa is very important for this crowd. Prosper Africa offers a 360-degree perspective of two-way trade and investment. The initiative, which brings together the resources from 17 U.S. agencies, serves as a single entry point for U.S. government resources. The concept provides an intertwined point of engagement, offering a toolkit for investors as well as programs for U.S. exporters and others, and this ensures the best of the U.S. government is readily available and centralized in one place. For example, projects might find innovation capital from USAID, or a feasibility study from the U.S. Trade and Development Agency, or grants from the U.S. Africa Foundation. But rather than soliciting each of these agencies individually about their programs, Prosper Africa exists to start that conversation with many entities all at once. And I will say a possible starting point for this particular community with Prosper Africa does coordinate individual virtual deal rooms entirely on U.S. investment projects. So, something to consider. But before you start knocking on the USG's front door, I want to strongly speak to the value of proper due diligence. So this is important to any conversation, and certainly with the U.S. government and elsewhere. But first, know that approaching the U.S. government is much more effective with initial understanding of the U.S. agencies at play. Know how they operate, know their priorities, how each agency or program might be of value. Having an understanding of this ahead of time is incredibly valuable. A couple of examples to help you think about your approach. For example, if your inquiry leads to DFC, it would certainly be helpful to review that agency's past activities, since it really points as a good indicator of future activity. Seeing what projects have been supported by DFC, the Development Finance Corporation, in countries or sectors could be a good roadmap for your own project. Or if you're working on a public project, beginning with a request to learn specifically about the Export-Import Bank may be the most appropriate avenue. So if you are seeking field testing or training support or capital for scaling, knowing the differences between USAID and USTDA before a conversation can be incredibly helpful. Just a few examples, but really I use these to stress that when you connect with the USG, your initial due diligence is such an asset. It helps you understand just what type of partnership would be the best service or program of most use. And a few more examples. So the Export-Import Bank letter of interest, which demonstrates the USG support, could be that foundational piece for your project to getting underway. Knowing to ask for it or knowing to lead the conversation in that direction is incredibly valuable. Or perhaps the best resource for you is initial review of private sector financing support from the DFC, or an overview of compacts and contracts from the Millennium Challenge Corporation. Again, having an idea of what your project requires can give your conversations a wonderful head start. I will add that part of your due diligence should go beyond memorizing agency programs, but also take time to learn where the U.S. government is really shifting its attention. An example to share with you today, the U.S. government appears to increasingly encourage that impact investors work with the diaspora community here in the U.S., which, and in turn, may be able to identify some great diaspora resources and partners. In this instance, I think of Vista Bank, a Washington, D.C. based banking solution that has demonstrated its ability to serve Africa projects and offers banking solutions leveraging its own market familiarity. As a result, by the way, Vista Bank has been part of more than one press release about a successful USG partner deal in Africa. This is very noteworthy, and it is something that the USG appears to be moving toward, so do plan accordingly and do spend a little extra time doing the due diligence of how to engage the diaspora. There are some lessons about agency priorities that are also worth learning, as it may be able to lead to other resources or other useful conversations. And really, maybe the best basic takeaway from this conversation here today, thorough due diligence really is such a critical part of any project. I really cannot stress how important it is to learn your market, to know your sector, to explore and organize your financing options, to understand the role of the U.S. government and its many resources, and also understand the personalities and goals of potential investors. And another part of that due diligence is having appropriate expectations as well. Because whether working with the U.S. government or working with an individual investor, having an accurate understanding of the outcomes and of timelines and of performance expectations is so important, not only for an effective project, but also without any undue stress, because realistically, any project will present enough challenges on its own in the due course of time. So proper due diligence will help align realistic expectations for you and your investors with shared goals, something that certainly is expected here in the U.S. Investing community. And again, part of this includes knowing your market and your sector, and knowing the government and knowing your investment partners. Let me finally say that third parties can be incredibly helpful with due diligence and expectation setting as well. Consulting firms can complement your outreach efforts with strategic advice. Universities and NGOs might provide access to market data and other key information. Even leveraging board directors, board members, in-house advisors, these can provide valuable insight to ensure your project is as watertight as possible going into key conversations with government and private sector investors. So coming to a close, I will make a special note of one more resource, and that is the AFSIC dashboard. It has a number of great resource information at hand. It puts so much information into your hands just to start start from day one. So again, due diligence and setting the right expectations is of great value, and recognize too that while the U.S. attitude towards African investing is catching up to the European mindset, note that it is indeed on its way and gaining momentum with a concentrated push and a great amount of enthusiasm by the U.S. government spearheaded by Prosper Africa. I hope this brief primer has prepared you to take advantage of all of this week's excellent resources and insights. For questions or to continue the conversation, please do not hesitate to reach out through the conference platform. Thank you again. My name is Rauch, and I sincerely appreciate your time today. Have a good conference.